Emerging markets must develop a comprehensive regulation and sophisticated market infrastructure so as to give protection to their investors and to create market confidence. You're watching Economic Buzz, one talk show that brings you all business matters and policy, the economic issues, and analyze the Indonesian market to help you to make the right step for your capital investment. For you international business people in Singapore and Indonesia, I'm Vicky. Let's talk about your business on eBuzz. Affected by the quite sluggish economic sentiments globally, it is a major issue in Indonesia capital market recently to rebuild market confidence to keep the momentum of the bullish market, as reflected by the increasing of the market capitalization as well as the investment fund. Here is the report for you.
After slowing in 2012, global growth is actually projected to pick up during 2013-2014, supported by policy actions in advanced economies that have helped mitigate downside risk. The global economy is expanding at 3 different speeds, with the emerging economies growing rapidly, activity in the United States gaining momentum, and Europe continuing to lag as it struggles with balance sheet repair. In this context, external financing conditions are expected to remain easy and commodity prices near their current high levels in the coming years. However, these conditions could reverse over the medium term, including if advanced economies do not decisively deal with unsustainable debt dynamics, or if growth falters in key emerging economies. Many are still optimistic that global economic prospects will improve as policy actions in advanced economies help diffuse the serious short-term risks that were looming some months ago. World output is expected to rise by about 3.25% in 2013 and 4% in 2014. The strength of the global recovery, however, remains uncertain. In the near term, fatigue in repairing sovereign and bank balance sheet in the euro area could reignite market stress and compromise global activity. In the United States, the short-term risks have become more balanced, although failure to replace the fiscal sequester with more backloaded measure before October would imply a larger drag on growth in late 2013 and beyond. Meanwhile, medium-term global risks remain elevated. Lack of decisive actions to put public finances on a sustainable path in key advanced economies could hit investors' confidence and global growth. Given that situation, what it takes then to rebuild the market confidence, especially in Indonesia? MNC Business Report for Economic Buzz.
Yeah, to have a deeper view about rebuilding the capital market confidence, we have Mr. Vicky Amarnani, our market strategist, Monex Invest in the Futures. Hello, Mr. Vicky.
Hi, good evening.
Thank you very much for attending eBuzz talk show for today.
Pleasure.
Here we are, Vicky, talking with Vicky.
Exactly.
Okay, so talking about your perspective on the state of the global economy today, how is it? How do you see this actually?
Well, we all know that we are in an environment where there's very high uncertainty and interest rates are low. So the rates or returns that people are getting on the investments is considerably low for the risk that they're taking. But yet we still need to have our money to work.
Yeah.
And if we see the global economy now, in fact, I think the only economy which is moderately recovering, though with high debt, is the US. S&P yesterday changed their outlook from negative to stable, saying that there's progress in the labor market, housing is improving, even consumer confidence is at all-time highs, jobless claims at 4-year lows. So from the US economy, yet very sensitive, it is improving. But if we have a look at the rest of the world, I mean, I could comfortably say that Europe has already entered a mild recession. China is slowing down, expected to grow with a growth of 6.5%. Even Indonesia's growth basically is the slowest in the last 2 quarters, even though it's above the 6% mark. It is under risk for slower growth, possibly down to 5.8%. India, GDP has gone down to the lowest growth in the last 10 years, down to 5%. So all Russia, Brazil, all these emerging markets are facing slower growth. And what's
Yeah.
the concern? They could be facing high inflation, low growth, or even in fact no growth, and which could lead to stagflation. So that's also a concern. So if we see the health of the global economy, it is not in a comfortable position.
Yeah.
But basically, what the governments need to do is keep the sentiment good in the market, provide confidence that the market will improve, will recover, and as long as there's no panic in sentiment, which we are seeing currently in the moment, there is some panic, there are corrections. The Nikkei has dropped almost to 20%. The Aussie dollar has broken new lows to 0.9320. Gold is coming back down towards its low 1360, where we'll discuss later whether it's going to break new lows. So there is a lot of concern. Even the Indonesian stock market has dropped 3.5% today to 4,600 because there's been an outflow of $800 million from the Jakarta market in terms of bonds and equities. So yes, there is a panic, but I would definitely say one thing: the best investments are always not done during the best times. In fact, during these panic moments are when you find opportunistic buys, as long as you're selective with good credits.
See the blessing in disguise. Yeah?
Exactly, see the blessing in disguise. Then you can make good investments which provide you good returns. So there's a lot of good picking you have to do in this kind of market. Yeah.
So if we're talking about the correction on the indexes in as you told me about the emerging market like China, India, or even Indonesia, is it the right time to get in? Especially if you're talking about the price of the stock itself, like it's corrected.
Yeah.
It's quite cheap. Is it the right time to get in?
Well, see, there's always a saying, you can't catch a falling knife. I mean, you can't pick the bottom when the market is falling. But yes, I would say prices are very attractive already at these levels. But see, what drives the whole market is sentiment.
Yeah.
I mean, the same problems were still there in the market, but 2 months back, people or investors decided not to focus on these problems, like the trade deficit out of Indonesia, high unemployment in Europe, slowdown in China, these big economies. But now when the panic is coming, people start realizing that these problems actually exist from before and are causing a correction. So you need to basically, for stocks, do good stock picking.
Okay.
And for equities, I mean, my favorite indices still remains the Nikkei. The dollar yen, the yen is still going to continue to weaken. There has been a big correction, but we're still on an uptrend. With the dollar yen to continue rising means the yen to weaken and the Nikkei to rise.
Okay.
The Nikkei has fallen from almost the 16,000 level by 20%, now at 13,000. It even went down to 12,500. So I still think it's not a downturn. It is a correction, but don't start buying everything over here. Maybe start investing. If you haven't already invested, invest 30% of what you actually want to invest, and look for averaging out below.
It's getting interesting. We're going to continue after the break. Yeah, make sure that you're still on Economic Buzz. We are discussing about rebuilding the capital market confidence.